Good morning, ladies and gentlemen, dear traders around the globe. We would like to say welcome to our real-time daily trading idea webinar, 5 days, 5 traders. In this webinar, we would like to screen the markets, show you some interesting trading setups, and discuss the topics of the day, and for sure answering your questions here. But first of all, here's our risk disclaimer. So be aware that Forex and CFDs are leveraged products and can result in losses that exceed your deposit. So they may not be subtitled for everyone. And please be aware that all we are showing and presenting here today is just a personal opinion of our traders and not an advice for investing. As I said to the beginning, 5 days, 5 traders. Today, normally with Paul, but Paul, unfortunately, is sick today. So today we have here Dirk from Friday. So Dirk, you have the special thing here this week, 2 times with us. So yeah, we're looking forward what you are saying us today here. A quick overview of some of our offerings here. For example, here our bestseller, the DAX 30, with a typical fixed spread of only 0.8 points during the main trading hours. These and other products you can also trade in the mini contracts. So it's easy to trade with a small depot. So off the right side, you can see here some of our awards from our customer service. If you have additional question, feel free to contact us. We will help you. Here are our telephone number and also our email. All these live trading webinars are recorded, so you can find it later on our YouTube channel. So here's a picture from Dirk. I say hello to you, Dirk. Hope you are staying well and you have the screen and can start.
Yeah, good morning. Let's just check out if the screen is right now transmitted. I hope everything is quite clear and the sound is perfect. So
yeah,
let's have.
Sound is good. Screen is there.
Sound is
so
good.
Yeah, you can start.
All right. As you can see, very start with the Eurobond future. That's right now ticking around 163.57, 61, as you can see to the very left. Let's have a couple of seconds or a couple of the first minutes to that case of, let's say, that case, the name of Italy. Italy is facing, that's the headline, one of those headlines today. Italy is facing snap elections. And this could turn, and they say this could turn into a referendum on the euro. In the end, look at the Eurobond future. I think the market is quite convinced that this could happen. And especially, let's express it that way. It's really something like a nightmare to the Eurozone, because the rest of the Eurozone will be dragged to the downside as well. As you can see, as all the markets today are quite red or deeply red. Look at the DAX, look at the FTSE, look at the CAC around, look at the FTSE MIB in Italy, and look at the stock 600 banks, for example. All these important indices or benchmarks are very to the downside, around 1.5%. And the Italian one, of course, is the worst case. It's 2.64% in the red. So what is going on with this, and why is it so important, or why it might be so important, is that Italy is not Greece, and Italy is nothing like, for example, Portugal and the smaller countries. Italy is the third important industry in the Eurozone and the third powerful nation in the Eurozone. So this is something like Italy is too big to fail. It's really that way. And a couple of boys out there know that. And the more they have exposure to Italy, especially the banks, a couple of German banks, a couple of French banks, let's name them. It's like Deutsche Bank or Commerzbank from Germany, or it's like BNP Paribas or other Societe Generale, for example. I'm sure they all have a little until a really good one or a strong exposure to Italy as well. Just because they're handling out credits to Italian companies as well. So the more the exposure they have, the more they try to maybe get rid of that. And you can see that at the Eurobond future, for example, that a couple of those guys are really escaping from Italian bonds. and running into the safe haven like the Bund, the German Bund, for example. And if you have a look, you can really check that out via CNBC, via Bloomberg, whatever you're using as your kind of information center. You may check that out with the levels of bonds in the recent days. You see that you see it right now here. I will insert the so-called shape, let's say a rectangle shape. They started around the 158 level and went up to 164 in really a short time. That remembers us at the time of the European crisis, the Eurozone crisis. So if you check, for example, if you check bonds, the German Bunds, always compare those, for example, with 2-year, 5-year, and 10-year runners. Let's just explain that at the point of the 10-year Bund. The 10-year Bund right now is yielding at 0.229, so approximately 0.23. And if you look at the 10-year runners of Italy, those are running at 3.18 right now. So that's a spread. It's almost a spread of 3%. Huge, really huge. And the more the spread is going up, the more the boys are scared in the ECB tower here in Frankfurt, I guess. And let's say they might be heading to an important meeting the next days. I'm not sure if that meeting at the 14th of June, where the next meeting of the ECB is enough. I guess they will try to do something or try to guide something. Anyway, this is a point of the Eurozone is still defragmented, and if you go to the south and if you go to the north, the Eurozone is really cut in half. In some kind of prosperous or some kind of a healthy region, and with a region which is loaded with debt, and then that's especially Italy. And besides that, it's not only Italy. Besides that, we have Spain right now. If you look at the headlines as well, Mr. Rajoy in Madrid is facing some kind of a confidence vote. Or let's say it's a confidence vote. This will take place on Friday. Okay, enough for the bigger economic outlooks or economic forecasts, and especially about the last minutes about this kind of opinions. It's my own opinion. It's just my own opinion, and just how you observe markets. So this may lead a little bit of relief right now today at the European future, as we can already see that one is coming down a little bit. Why? Just check out the RSI, so the relative strength index went up to approximately 80, and that's on a daily. If you go to the 4-hour chart, it headed up to almost, let's say, what is it, 80, 85, 89, 86. So this is something like a nice entry for a short, for a really short for a couple of minutes, let's say. That might be something when the European future is coming up again, maybe corresponding to some new crazy news from Italy or Spain. Okay, let's have a look at the German DAX. So that might be interesting to see where the DAX is heading to. This morning, a couple of trades already took place between the 12,620 and 12,650 level. As you always have the problem as a trader where to exit and where to entry, or the other way around, where to have the entry or where to have the exit. Let's just have a look at the current markers, for example, the Fibonacci markers. You see the last high right here, and you see the last low right here, and especially as always, you see 61.8 levels. The 61.8 level is a Fibonacci level, which is quite important. A lot of, let's say, reactions are taking place at this marker. You will be having a look at the 50 and at the 38.2 as well, but let's say for the first reaction zone, we are already tested that one, the 61.8, which is around the 12,620s. So this is like this, I always describe it as a trading box which is situated right here, where it might be interesting to reverse long and to check out if the US are maybe moving into a direction to get green again. Right now the futures are in the red, since this morning. US futures have been diving into the red. If you have a look at the Dow Jones, the Dow Mini future is about to change. It's going to be less than, it's going to be losing more than 200 points so far, if you have a look at the Dow Jones futures at the pre-markets, for example. S&P 500, NASDAQ, and Russell all are deeply in the red. So there has to be something very positive in the next hours when we reach the time of the US market opening. The US boys, same thing like the UK boys yesterday, have been off just because of holiday reasons. There have been something like, for example, US boys had Memorial Day and UK had the banking day, so banking holiday. So this is something which is going back to the markets, of course, since this morning. And if we have the possibility to reverse, we should do that right now between 670s or 620s. So in the middle, let's give it a little bit of a relief again, maybe a little bit of a dive back down here to this line, the 61.8 level, and reverse long just as a first try. So that might be, for example, check out these levels. You got the order letters. You have the possibility to check the order letters to have a buy stop. For example, directly go to a 61.8 level right here, or go a little bit underneath. If you have, for example, 12,620s, 12,625, you may have a buy stop, for example, with 2 lots. So you are able to exit 1 lot and later on move the stop loss to the entry zone. One situation, one quite comfy situation. So you might place the buy limit a little bit down here, go up, place a take profit as well, maybe the half of the move. Let's say it's the 12,700 or the 12,720. It's just an example right here. Don't count on that. That is exactly just to show you how this works. And of course, don't forget to place a stop loss. If you are talking about stop losses here, you might be aware that the market is very volatile, so don't give it too much room to the downside. Maybe you will check out something like 50 points, or let's say here is it described in euros as well, not more than 50, between 50 or 100 euros of risk. I just choose that one around the 95. No, let's say, now it's active. So for all these kind of examples, be aware that this is just an example how to use that tool here right now. I showed you that kind of a trading box. We can't have a look at your accounts, especially in your abilities, how many positions you already placed in there. It is very important just to be very patient, to wait. Hold on a little bit and wait until the market moves into your direction, for example. And if you are able to count, or if you're able to use the tools we give you here, there are a couple of tools. Even you can calculate the risk and calculate have the use of tools for the risk and money management for your service here. So be aware that trading is, of course, on the one side is a high potential of profits, but to the downside as well, there are a lot of risks. So let's have a look at the second or the third most important market today. This morning I started with a Euro-US dollar reverse long. I'll tell you why. If you have a look at the yearly move, you will have a low at the 8th of November 2017. That low was 115.53, or let's say 115.54. Around this level, we already marked this level, and we already checked this level this morning. Not long ago, just a couple of minutes ago, and we go back to the 4-hour candle and just widen that picture a little bit so you can see more. This long scenario is a stop loss scenario with 115.27, and the take profit should be at the first. Let's delete that one here. At the first reaction zone to 117 and the way up to 117.50. The first where you move the stop loss to the entry might be an area between the 116.70s and 116.80s. I'll tell you why. It's another quite important Fibonacci line, just because of all these horizontals, Fibos, and I will delete them all just to have a naked chart right now, because otherwise it's too confusing with a lot of lines like that. You can see the Fibonacci's from the record high of the euro-US dollar in 2008, which was around 160.38. Then we got the year lows, the last low here at 103.40. That's from the 3rd of January 2017. And as you can see, we already checked this line. The market already checked this line, this 38.2. That's 125.15 level. And the more important level for us right now, where we can have a reverse to, is that overall 23.6 Fibonacci, which is around the 116.80s. So that might be a move where we just have a look on where the market could retrace to, or the market could reverse to. So that means that the trade is just because of that we might move to this I made a triangle. Damn. Hold on a second. Arrows. I wanted to do that with an arrow. So that means that this market, this trade here, this position is just to get back up there to this 116.80s, just because of a technical reaction. As you can see right now, we are diving back down. It could, of course, it could just fall out of the window and go to the next low. And the next low, a very important low, is at 114.50s. And let's have a look at the weekly as well. Excuse me. Yes. And have a look at other Fibonacci retracements. The object list, and we'll delete this one here as well to get a naked chart again. So 1 second. Okay. And to place the other way around and from the downside to the last upside, just to see another projection. And another projection is the 138.2 level. So this is the way to the downside, of course. There's a projection level and directly at around 114, and the next one to the downside is already the 112 level, 112.05 level. Okay. There have been a couple of markets yesterday especially, which are kind of interesting. As you can see, for example, the gold trade this morning. The gold trade this morning got a little bit of let's say first pop up. It's quite interesting to observe what happened to the CFTC data. So every Friday, as you may know, there is a COT report, the so-called Commitment of Traders report. This kind of Commitment of Traders report gives you a hint what is going on with the speculative money, with the big money. You may get a little bit of information about so-called the net longs and the net short positions. You may get some information about the contracts. Did they go up? Did they go down? For example, the gold net longs are at the historical the second low after the beginning of January 2016. So it's a couple of time. It might be reversing to the upside. That does not mean that the gold price is rocking up the next days or weeks to come, but it could be reversing to the upside to this 13-14 level here. If you want to know where this level is coming from, you got two highs here. It's something like a double top right here. You will place the shape here again. And it's going down to this last low, which we have at 1,282.05. So that's where these Fibonacci retracements are coming from, and the possible retracement is the first actual tested retracement at 1302 levels, and going up, the next one is at 1314, which might be a next target to the upside for the bulls. If they remain long, they might be able to have some kind of a target to 1314. If you are into trading, into swing trading, or into position trading, or into day trading, you might be you might know that those targets, maybe it is better to just have a target of 1310, just because the market is not always scratching, or always having contact with the market direct. So you might be taking a couple of bucks down to 1,310, for example, or 1,311, just as a target. All right. I spoke a lot about a couple of markets. Maybe there are some questions to special markets, special analysis. Any wishes?
Yes, Dirk. A lot of question here about the oils, for especially here the Brent market. So there are a lot of movements in the last days. So maybe we can have a look of these things.
Okay, Brent, chart window. Just close that one. We'll close that one here as well. And of course, first of all, going to the daily and having a look at the last correction. If you see that one, the last visible correction is that one here. That's the biggest correction of the last weeks, or let's say since the beginning of the year 2018. And if you have a look at this correction, you may see that you have as well possibilities with the Fibonacci retracements. Well, just let's do it that way. It's bigger, otherwise you won't see anything. Let's just try out if this is the high. Yeah, that's the high, and let's check out if this is the low. In just 1 second, that's the low of 62, and that's the low of 62.05. So that's correct. Okay, so you can see there are a couple of targets to the downside, of course, but right now it looks like this one 38.2 is a little bit of a support. Still, it looks that way. By the way, I don't like that candle because it looks like a little bit of a hammer to the other side. If you check out this on the 4-hour or on the daily or on the 1-hour chart, it's of course everywhere you go down or scale it down to even to 5 minutes and 15 minutes, you don't get the whole picture. So let's stay in the daily chart and look at what happened in the last days, especially at the oil market, especially when economic data and things like Italy or interest rates go up and the dollar is going up. The dollar is strengthening a couple of let's say a couple of weeks right now, and especially last 2 weeks. And the more the dollar is strengthening, and the US dollar index went up as well, of course, the whole broad US dollar index. So that means the more the US dollar is strengthening, the more these kind of commodities, especially like gold, especially like silver, and on top of that, like Brent and WTI are going to the downside. Why? Because they are calculated and they are traded in US dollars. There are a couple of reasons to be just on the sidelines and watch that oil market, because there could be another slide to the downside, and that's the only reason to be patient. So if there is a move of the intraday move of 2 or 3%, you may just react as well to the upside as well to the downside. So it's really I need to express it that way because there is a lot of, let's say, hot air, a lot of diplomatic stuff, a lot of geopolitical stuff in there in this kind of oil market right now. And if you observe the movements of the Saudi Arabian and the Russian ministers, they just met a couple of days ago and discussed if they might exit or might water down the agreement with the OPEC to the production cost reducements, and they might widen the production. So This is something like ringing the alarm bells when the OPEC deal is slightly knocked out, because the more they produce, of course, the more the price of oil is going back down again. So that's one case in the last 2-3 days, and let's say over the last week. As you can see, this is the top 80.72, and around that, this kind of discussion already started. In the short term, let's have a look at the short term, and let's have a look at the 4-hour. The 4-hour chart gives us a possibility to check out the last high with that low. Especially interesting to watch if there is let's say a speculation to close that gap, that open gap, which is not only, of course, at the 4-hour, which is, let's first check it before I start talking about it. 76.15, 75.97. So it's not yet closed. So there's still a possibility that that gap might be getting closed. So that is one way to trade it. Maybe you could just speculate on a close of that gap. So that's one side of that medal. The other way, if you check out, there are a couple of systems as well giving you the possibilities to see negative Fibonacci's as well. That just gives you a possibility to save a little bit more time. So if you see the minus 23.6, it might be around the 72.95ers. So very close to that 72.90s, very close to that 73 marker. And if you have a look at the last lows here, go back, you will see that. That's the next bigger support zone from the last lows, already tested a lot of times here between the 73.20s and the 73 markers. That might be the next support zone. Oops, other way around, where you can go along as well. Right now it looks like a new short opportunity when this gap is getting closed, or is very close to be it's very close to be getting around here. So that trading box is a so-called short box. If it gets back up here, it's another opportunity to go short, just from my opinion right here. Okay.
Okay, Dirk. Yeah, thanks a lot for you showing us here some interesting setups for today, and also discuss the topics of today. So dear ladies and gentlemen, thank you as well for joining us here today. We will see us tomorrow, if you like, at the same time. Yeah. So I wish you a very good day. For our German guys, you can join as well our next webinars at around 3 p.m. German time. So yeah, you also feel free to join us here. So yeah, see you tomorrow and have a good day. So some last word from you, Dirk, if you like.
Yes, if you have a look at the market overview, let's do that. If you have a look at the current movements, for example, the euro dollar trade, my euro dollar trade right now just went down the draw, or let's say it that way. That was kind of 30 pips almost. In risk, they are just gone with the wind, and that's trading, of course. The other way around, it could happen that we had a reverse. It's not happening right now. It's really making us feel a little bit scared right now, because the velocity of the euro, how fast it's going down, is a little bit scary. So watch out. Every kind of a bigger move to the downside does not mean that you already have the possibility to catch the knife. It's a first try, and when it means it's a first try, it always means that it's a smaller portion of your account. So that means that it's you can try it, for example, with a mini lot. Nobody forces you to go long or to go short with a full lot. You may pay attention and just reduce your amount of trading volume, and especially if it comes to markets like the Euro-US dollar, for example, here today, or the German DAX. Sometimes markets like these, they are very fast, and you can lose your pants in a minute. So watch out and just reduce the amount of money you trade just the next 1 or 2 days. Observe the policies, observe the reports of the news agencies, or use the ticker here as well. Admiral Markets here gives you the possibility to check out the ticker with the political and economical reports and forecasts. Okay, that's it, guys. Hope to see you, or hope to hear on Friday. Thanks for having me on again, and have a good trading day. Good trades. See you Friday. Bye.